We're back at it again today with the Broker Realtor Connect. Today I have a special guest here, a longtime, real estate agent partner, Darren Wade from Strive Real Estate. He brings a lot of value, a lot of expertise and experience. His team, they're actually number one with the real brokerage. But without further ado, I'll let Darren go ahead and introduce himself and be our guest for today.
Yeah, thank you very much for having me on, Marshawn. It's an honor and a pleasure to finally sit down with you digitally and discuss this program that you have that will easily double our commissions as real estate agents and give us more tools to help our clients, our sellers, turn into buyers sooner rather than later. So I'm really excited about this. Just personally, in our business, we come across this all the time. We just closed on a client that sold a home and bought a home this morning before we got on the call. I'm helping another seller sell a home, and they're going to buy as well. They're going to move to probably Atlanta or another place that they're considering as well. So I say that to say this comes across um, our opportunities as an agent pretty often. So I'm excited to dive into it more and get some more of the details of this program.
Yeah, I mean that's great. That you had a client. Like you said, it just hits right on the subject where this actually incorporates into you guys's business model, and it's kind of like the new way of doing business where a lot of agents might think that, oh, let me have this client sell and then go through the process, but then this takes like you said a multifaceted or multi-team approach, and so you have to be have a little bit more skill sets and talent, to be able to, do two things at one time. And so, with that, about this program and what it basically is, the client that, a realtor might be representing to sell their home, you know, at the end of the day, they're going to have to live somewhere. And, whether it's going to be, within the same city, or maybe they're outgrew their home looking for a bigger home, or like you said, moving to another state. If they have enough equity in their home, then, we're going to get them, a short-term financing, and it's actually going to be, it's going to be a good rate, and it allow them to purchase a home and make a strong offer. And so they're not, delaying, because time and money and opportunities, what you see today on the market might not be on the market, next month. And so this allows them to turn, a real estate agent to turn a seller into a qualified buyer fast and unlock the equity in their home with the short-term financing. And you basically close two deals and get two commission checks, and you also get to keep your pipeline moving in the market. And so your client wins, the realtor wins, and you turn one transactions into two. And you can go up to $5 million. We don't require any seasoning, no cap on cash outs, and that's a big huge thing. No cap on cash outs. I mean, it's great for an agent to cap out and not have to continue to pay for things like that, but when you have a no cap on the cash out, that's huge. And this is available in 50 states. FICO score can go as low as 600. No credit or limited credit borrowers are allowed. Non-occupant and co-borrowers are accepted. 1 year tax returns. So it's really not as difficult to get approved for this program. And your cash out proceeds can be used as an asset, depleting income. And we also lend on unique properties. And a lot of lenders, won't lend on, ADUs, condo tails, some of those, properties that, that just doesn't fit, you know, their, you know, their overlays or their guidelines. And we're talking like mixed use properties, unpermitted additions, deed restricted manufacturing, building homes. Also a lot of those, acres where people might move to farmlands and stuff. And so you might have those farmers, that have generation after generation as being farmers, and they have that agriculture out there. They might have, some of those almonds and pistachios, and, they might want to, upgrade their house or buy into something like that. That we have, our program is great for that as well. Also for the, the visas, the DACAs, there, no credit score is required. And gift funds is also welcome as well. And this is better than the bank statement loans, and it just avoids the higher interest rate and the cost. So the interest rates are going to be really competitive and reasonable. And if you're self-employed, this is also an opportunity for those people as well. And you can also close it in the LLC, which gives you a little bit of a liability and privacy protection. And that's a lot of things where a lot of people are not realizing, that they might want to be private on, who owns that mortgage or who the name closes on. And this it's really a diversified product, for an agent. And so I'll go ahead and turn it over to you, Darren, and we can kind of you know put our heads together and see how this can benefit and add value to your company, or even a real estate agent out there that might be struggling on how do they boost their productivity.
Yeah. So how I think about how this would benefit us and any other agent out there is because the quote unquote traditional way that we've always done contingent offers is we have a seller that wants to sell and buy at the same time. That's I'll say 90% of the time the way they need to do it, because they need to get the money from one property into the other property or in order to buy the other property. Um, and very few of them can keep the property that they currently have, buy the new property that's usually more expensive, takes a good amount of money down. Usually they can't buy that and then sell. So they usually need to buy and sell, or sell and buy at the exact same time. Um, so this program would help with that. I have a few questions, and then you can rattle off some of the answers for me, because I've had people ask me about these type of programs before, a few times before, and then they always have a few questions. So I jotted down a few of them here, and you can give me kind of a ballpark figure on how that works. What are the typical interest rates for that type of loan? Is I guess, yeah, simple question. What are the typical type of interest rates? And is it like a HELOC, or is it a second mortgage? Tell me about that first.
So the interest rates, change daily. And so
Mm-hmm.
this is not going to be a hard money loan interest rate that's going to be in the double digits. These are going to be in the single digits. So you're looking at 6.8, maybe 7, or it just depends on the credit. The better the credit, the better the better the par on the interest rate.
Mm-hmm.
HELOCs, I I educate clients on a HELOC, because a HELOC changes monthly and it can get in the double digits as well. And
Mm-hmm.
so HELOCs is not my go-to product. Always, recommend fixed products, 30-year, 15-year, or even an ARM, because that's how you're going to get a lower rate. I can give you interest rates in the fours, even in the threes with an ARM. And, interest rates is like my best thing to say is you marry the house and you're going to date that rate, because that rate's going to change. And
Mm-hmm.
the other question is that you asked was, um, you know, we answered the question about the interest rate, and we also
Mm-hmm.
answered the question about the HELOC.
HELOC.
And,
Mm-hmm.
this is basically not a bridge loan. A bridge loan is only going to put you it's going to be restricted to primary residence. So that's why we call it a short term loan, where it's not restricted to primary residence. It also includes investment properties. And so it
Mm-hmm.
also it has to be single family, 1 to 4 units. Anything above that, you know, we just don't lend on that right there. And so, that's everything, as far as, breaking it down and giving you, the facts on, how that program works. And it's like you said, it's for clients. And, sometimes they have, unique properties, or, individualized situations that this would benefit them, where if they, found a home, and by it being up to $5 million, you can buy a mansion, for $5 million.
Mm-hmm. Yep. Okay. Thank you for that. And so, elaborate a little bit more on how that works on investment properties. I'm sure it probably works the same if it was investment or non, I mean, or owner occupied. Um, but what does that kind of the step-by-step process look like when utilizing this program? So if I have an
So
investment property that I'm looking to sell to buy another one, um, what I used to hear is doing a 1031 exchange, right? Um, But if I guess how would this program work out step by step instead of doing a 1031 exchange, or would I still do a 1031 exchange?
So with the 1031 exchange, I have a we had we I think we had a discussion, but we really didn't really highlight on that. 1031 exchange is, the old way of doing business. So I call that the Cadillac. The Cadillac is reliable, it has a name brand, everyone has trusted it. But, we also have the Lamborghini, which is a sports car, more faster, more, it gets you from point A to point B, and it's a high-end, vehicle. And that's what the metaphor is. It's a vehicle. 1031 exchange is a vehicle where we have it to where you can upgrade from a 1031 exchange to a deferred monetized installment sale, where you can actually, it depends on if they're looking to continue to own, buy and hold real estate, or they just actually looking to exit out of the market and basically saying, you know what, I've had this property for 30 years, I'm trying to retire and move to Florida somewhere. That's where our 1031 exchange alternative works, where they'll put in money into an investment that is safe, doesn't link to the stock market and things like that, and they can turn 1 million into 5 to 7 million dollars. And they also, and it also reduces their capital gains tax. And so you're looking at what you're paying. California, you're going to get hit with the capital gains tax, which can be anywhere from 15 to 20. And then of course California, you have to think about the 3 1/3% that's deducted. And so what they're going to originally pay is 3 1/3% off the top to California. Because anytime you do a real estate transaction over 100,000, you have to, they have to take taxes out. And then for 30 years, you'll pay 1% federal tax on that sale. And it's a unique program. And it's all set up by an attorney, real estate attorney, as well as a trust, or, however the client wants to be feeling comfortable with. And, to go back to what you were saying, like, how does this work with an investment property? This is all equity driven. And so if you have, the loan to value is there, 65%, 70%, those are like the real, the comfortable numbers that a lot of lenders like to see. 55%. If you bought that home 20 years ago, your equity should be, significant. You shouldn't have a problem on getting any cash out unless you refinanced and have, several first, second, third lien positions. Then that's where it now becomes a little bit more complex. And so that's the really the engine behind, this program, is you're leveraging that equity and you're using leverage, and you're not getting into double digits, and it's short term, not bridge, because bridge restricts you to primary, and this opens it up to where you're able to acquire another property, whether it be an investment property. I mean, but if you're looking to own it, we have other programs that allow you to to take advantage of that, because that's where the DSCRs come in at, where now you're not even looking at your credit, you're looking at basically the cash flow from this property to be able to pay the note. You just got to come up with the 20% or 30% down, and that'll give you more doors, in your portfolio.
Right on. And you mentioned it a few times. What is the time frame to sell when somebody's utilizing this program? So let's just switch it back to owner-occupied seller going to buy a new primary residence, right? Because that's the majority of what people that would be using this program would be the bucket they would fall in. So if they are using the program to buy a new primary residence, how much time do they have to, I guess, find that new primary residence, and how much time do they have to sell the previous residence in the process, or once they move into the new one, to the new home?
So they're in a sense they're getting another loan. And so this is basically a short-term financing. With that, whether it be interest only, because it's going to be interest only. We're not looking at principal, because it makes no sense to say, hey, we're going to, have you pay, on the principal for 30 days. So, there's interest on that 30 days that they're borrowing. So they're going to borrow this money, and they're going to pay the interest on it and whatever is due on the term of the loan. That's the way that program works. And so if it also goes back to the agent where you have your buyer consultation and you're, understanding why is this client selling, and what is the client's needs, that why are they wanting to, sell, exit this home and then get into a new home. Is it because their family size have increased and they've outgrew their home? So you know yourself as an agent, I know myself as a loan officer. I say that for me to finish, from getting a pre-approval and actually getting the closing the loan, it's 21 days and under. Now, for an agent, that it might take 45 days, 60 days, those are some, extenuating circumstances where, what is the barriers that are preventing you from closing in 21 days, as an agent? Because if you coming in, you're pre-approved, everything is all the docs, the financial, everything's all backing, why are we not closing in 21 days? You know?
Gotcha. And so so 21 days is how fast you can close on the new home or the home that they are moving into,
Yeah, I mean, it's only like,
right?
a week to 2 weeks to get, pre-approved. And once you get pre-approved and then, escrow, and you open up an escrow and you're funding it, I mean, it's basically a full doc application. So these are full doc applications, which means we're looking at everything, the credit, the history, all that, and it's, also going through that process. And so, we have multiple investors, that are in this space, for these, buy one and, turn a seller into, a buyer as well.
Got it. And then how much time can they have that loan, that interest-only payment loan, after they move into the new home? How fast do they have to pay that back by selling their previous home?
It's going to be on the conditions of the loan. So if they say,
Mm,
we can get this, I only want it for 60 days, then there's going to be, extensions for 30-day periods. We can say, we're going to extend it for another 30, but it's not going to be designed to say, let's borrow this for 3 months and then turn around and, you didn't close, you change your mind. These are not people that are, not, have their minds made up and actually are going to make this commitment. These aren't for people that are, undecided, that if they want to buy or they don't want to sell. These are people that are knowing for, they've made their mind up. The decisions is, I'm going to sell and I'm also going to buy. And, they're not going to be, someone that is going to be kind of, undecided about what their choices are. So they
mhm,
have to be serious. These are for serious people, because, this is time and money. And so you don't want, the kind of person that, is, you know, maybe listening to, this person over here saying this and this person saying this over there. They have to look at all, what's on the, what the plan is, make an informed decision and move forward with, in this program, because, you know, you're borrowing money, and if you don't have it to pay it back, then it's going to create more, barriers and problems. And this is just not for those people that, just they can't really make their mind up, and don't really have a solid plan.
mhm, mhm. Okay, yeah, I can see how it would be important to have to seriously be in the market looking for that replacement property before you go through with the program and borrow the money because, like you said, it's interest only payment. So every day is a certain interest percentage or payment amount that they're getting charged. Um, so it's better for the seller and seller slash buyer to um, buy the next property as fast as possible and then sell the other property to pay back that loan as fast as possible as well.
Yeah, this
Um,
is not like a window shopping loan, because
yeah.
as a person that owns a home already, they've already went past that phase of being a first time home buyer and, not knowing what they want, not
Hmm.
really, saying, hey, I want this, I want that. Being an
Hmm.
owner, and you own either one property. This might not be your first, I would say, your first rodeo.
Rodeo. Hmm.
You should know, how to jump on that bull or horse, and take it by the horns and ride off
Hmm.
into the sunset.
Hmm. For sure. Yep. Yep. Got it. And what are some typical fees, if you know them off the top of your head? What are some typical fees for this type of program? Is
You
it
know, I mean, there's this program is still new for us as well, but there is going to be an origination charge, for us being a broker. then if you're going to be actually closing on a home, it's the same process that with a home. You got to have your real estate taxes, property tax, your title, your insurance, your deed search. All those things going to come into play. Agent, of course, they're represented by an agent. Those fees are going to have to be disclosed and discussed. And so it's the same process, because you're securing another home.
Mm-hmm. Mm-hmm.
Everything
Got
is
you.
going through title, everything is going through escrow. So it's basically, you're going through the same home buying process, but you're just not having to just wait on selling this home. You're actually, using this equity and, getting a head start on, being able to find a home and, move into something new.
Mm-hmm.
Because
Got
you yourself, from your experience, how long has it, what is your average turn time on you selling a home? Is it like 6 months, 3 months, 2 months, or is it under 30 days?
It's under 30 days for the most part. Simple general answer, it's under 30 days for the most part. There are, the outliers that are on the market for much longer than that,
Hmm.
as well. But most homes, when priced well and the condition matches the price, and we're competitively positioned versus the other homes and the other competition in the area, then yes, easily within 30 days. I'll say within, the first week or two, for the most part. So yeah, they move
That
pretty fast.
and
The harder
and
part is trying to find the replacement property with contingency is the harder part. But this program would eliminate that, what I call baggage of being a contingent buyer.
Yeah, I mean, so like I said, this program fits condo tails, non-warrantable condos, co-ops, anything under 500 square feet, studios, lofts, kitchenettes. I mean, ADUs, even unpermitted. So if you're having things going on where, someone did something in a home and it's clouding the title, we can get around that, and still get the financing, for unpermitted, rural zoning, small farms, ranches, even open land, and also our loan amount, minimum loan amount is 100,000. They can actually, on a special case by case basis, even go up to 80,000. So it's not like they're having to go out and take a huge loan. So you're kind of looking at like you're customizing your loan, and your options are so wide in range where you don't have to go out and take a $5 million loan. You don't have to go out and take a $300,000 loan, or even a $500,000 loan with an interest rate of 7, where your payments are going to be, what they are. And that's what makes people, a little bit more hesitant on even buying a home or a loan, because of the interest payments and the payment amount. But if you took it out, $100,000 loan, what do you think your payments? Your payments is going to be a couple of $100. So between a couple of $100 and making, being, sure on what you want, and like you said, as an agent, going through the buyer's consultation, understanding the client's needs, wants, and setting the right expectations. I always say, you have to um, under promise and over deliver, and then set the right expectations. So you know the client experience is everything, and so by understanding the client and making sure that they're trusting the agent, you're the expert, the loan officer or the expert. We're that's the team. And
Mm-hmm.
so for them to, this is not the new old way of doing business. This is a new way of new business, a new model, and a new way of doing business, where what they've been used to hearing or seeing, time is changing, and they have to also be evolving and adapting to the new way, to the new agent model, as well as the new loan officer model.
Mm-hmm. Yeah, right on. Here, can we? You gave some numbers there. Can we use a simple example? Because I'm more of a numbers guy, a visual guy. Can you use a simple numbers example on, a seller wants to buy a replacement property, um, how much equity, if their home currently is at, I don't know, 50%, or if let's say they own it free and clear right now, right, and they want to buy another home, um, and we can use simple, maybe 100, $200,000 numbers or something like that. Um, can you go through the, 10-step process, as simple and easy as possible, um, explaining that with the numbers?
Yeah. So, one thing about, this program is it is no cap on your cash out. So if you own your property free and clear, 100%, then you can get up, 100% of your cash out. Do you need that much cash? Most likely not. I mean, unless you're buying, 3 and 4 properties, then that's something different where, you have an investor, someone that's pretty much a savvy investor. Not saying they're not out there, but let's looking at, FHA, for example, $350,000 loan, you know, even if they put down the minimum 3.5, you're looking at $12,250 down. And the interest rate, let's just be modest and say it's going to be, you know, let's let's go six and a quarter, 6 and 1.25, but that's based on their credit. So your payments with that, going through the
So that,
little calculations here,
yeah,
you
no,
know,
that's good. So that 350 would be coming from a loan on the home that they're departing from,
correct.
correct?
So or they can just pay it all out cash outright. If they wanted to just come and say, they had enough equity, they can be an all cash buyer.
Mm-hmm. That's what
Because
I was going to
depending
ask as
on what
well.
they're selling and what they're, if they have no loan on the property, that why not go for all 100% cash buyer?
Mm-hmm. I see what you're
Why
saying.
even have a note and then turn that into a 30 year and get a new one for 30? And so you're coming in, with 350 down, and then any, that gives them a better advantage, because if you're negotiating with a seller and a buyer, and they're saying, how strong is your buyer? Well, your buyer's coming in with an all cash offer for what you want.
Mm-hmm.
you
Gotcha.
know
So in that example there, so if somebody has a paid off home of $350,000 or $350,000 in equity in their home, then they can basically go pay cash for another $350 home or less, correct? Because of the equity that they have in their departing home, can just
Yeah,
go
because there's no
to that.
limit on cash out requirements, and the seasoning is there already. They've been in a home long enough, and so it just gives them that amount. I mean, if they want to go conventional, they can go conventional, but just for sake purposes, then I say six and a quarter, 6.5. We're looking at 29-21 a month. And
For,
their principal and interest is like $2,172.17. Their taxes is $350. Their hazard insurance is like $160. And then if they put down less than 20%, you got your mortgage insurance of $239.24. But if they go even down lower to like a 5.8, 5.725%, then it's 27. And that's another thing that people don't really, how would I say, really look at the numbers and look at the math. You can throw $150,000 into a home with the same interest rate. Your payment is really you're not gonna move the needle on that gauge that much on that payment.
hmm
However, if you had $150,000, why not only put down maybe 5%? The payment is still going to be the same, and take
or
the
near.
excess of the 100, and let's say the 100,000, and go and
Mm-hmm.
buy a apartment complex
Mm-hmm.
that's let's say a 24 unit that's bringing in $30,000. And now you got passive, so now you don't open up another door. I mean, that's where it comes down to the agent and the loan officer and having the right DNA, and not from the old way of doing business with this new model, new way of thinking on, creating generational wealth and asset, just duplicating the process. And so it's just the
Mm-hmm.
mindset, and that's one thing that people are failing to realize. And so, if you have and that's where you as an agent really have, a deep dive conversation with your seller to see, what is their goals. Is it just retirement, or is it for income? If they're looking at, what, I can lose this, and you telling me I can go and buy out, and you yourself as a realtor investor, a dad investor, you say, what, why don't you go and buy a couple of doors, buy a couple of multifamily properties? Well, I don't want to
Mm-hmm.
manage it, and so, it doesn't even have to be California,
Exactly.
you know
Mm-hmm. Gotcha. And so the first part is they would contact you before they want to purchase a new home. you'll analyze the current equity available on their departing home. And I know you said 100%, but I thought you said maybe 65, 70%. I don't think you said loan to
That's for
value.
DSCR loans. When we're looking
Oh,
at
okay.
that product, yeah, DSCR
Okay.
loan is 65 to 70% loan to value. But on this particular, it's
Yeah.
no limit on cash out.
Gotcha. So they can basically go 100% of what their equity is what you're saying, right? And then, of course, I'm sure the bank will have an appraiser go out there to value the home, so that way they're protecting how much,
Mhm.
they're not over lending. They're not lending 400,000 when it's only, $350,000 in equity, right? That happens. And then after that, it gets approved of some sort, I'm sure. And then that agent and that seller slash buyer can then go out and start shopping for homes.
Correct.
Correct. And then depending on if the homes are in this example, if it's under 350, then they can basically say, hey, I'm a cash buyer, you know, basically borrowing the equity from my previous home and going to buy this new home at, 340 all cash. Or if they're going to get a loan and buy $1 million home, then they can use, if they wanted to, at 350 as a down payment, to bring their payment down, however much, or they can do a different amount or percentage of that $1 million to use that for their down payment. Is that correct?
Yeah, I mean, and you kind of hit it right on the money. And so, for just to, let everyone know that might be listening, is you also want to, I mean, at least bet at best bet, you want to at least put 20% down because that'll allow you to get rid of, PMI. And so that is going to lower their payments down, by a couple of $100. Anything over 20%, you know, you're like I say, you're really not going to move the needle much on that payment. And so if you're looking at, maybe investing, talking to a financial advisor or something like that, that's kind of the way you want to go because, if you had $350,000, you can take $135,000 and invest it. And in, 5 years or from 15 years from there, you're going to have, $3 million, 3.5 million guaranteed on a $125,000 investment that is not going to lose money, that's not tied to the stock market or anything. Take the difference of that, invest and buy a home. And, in 15 years from now, you just, or 5 years or 10 years from now, you're leveraging. It's all leverage. So we present, these different proposals to any seller or any, investor to give them, the full picture and not just, looking at from a tunnel vision. You don't want to have tunnel vision buying experience. You want to be able to have, you know, really open up the horizon and see exactly what their full potentials and capable of. And diversification is really important. And so, if they have $350,000, and then, you're saying, hey, you can invest 130,000 and it's not going to lose value, and it's also going to give you a death benefit, and in 10 years from now you're going to get 3.5 million on $130,000. That's just like buying a home that's going to appreciate over time and then buy the home. So
Mm.
you're kind of having two different strategies here.
Yeah, and so they don't have to use all that 350 towards the new home. They can use it in a few different ways. Does it only have to go towards other real estate? And does it have to be like approved by, the bank or the lender or I guess how does that part
I,
work?
I mean, they can use their cash, for investments, renovations, or financial flexibility. That's the terms, that they're using the cash for.
Okay.
So the restriction is not gonna. I mean, because they're securing it with their property.
I got you. Yep,
That's the
secure
collateral.
as a collateral.
Yeah.
Yeah. Yep. And then so that 350, no matter how they use it, once they sell, because I know you said the time frame for the payback, right? Every month you'll have an interest-only payment for as long as you have that borrowed loan out. Um, and the time frame to pay back that 350 varies, right? Does it go over a year, or is it within usually, or does it say that? Like, does it say up to, 12 months or up to 6 months, or does it have a max time frame? for borrowing that money?
I mean, it can go interest only, and so it's short term. The thing is short term. Short term. I mean, there is interest only, payments for 1 year, 2 years, 3 years. It is interest
Mm-hmm.
only. I
Mm-hmm.
mean, it's just interest only, mortgage, and
Mm-hmm.
it'll become due, and eventually you're going to have to refinance out of that into a
Mm-hmm.
permanent financing, and
Mm-hmm.
so short term is short term, and so
Mm-hmm.
you know, the goal is if they're borrowing that money, they're going to convert it into a 30-year fixed mortgage.
Mm-hmm. Gotcha.
Not to say, take this, and pay on it for 3 years or 36 months interest only. You have to convert it to a permanent fixed mortgage.
Mm-hmm. Gotcha. Or basically buying another property and then make sure you're selling that previous property to pay off that borrowed amount.
Yeah.
Gotcha. Okay. Thank you for that. Um, I think that kind of goes through what that process looks like. Something you mentioned a few times was like ADU lending, um, or for an ADU, and you mentioned home improvements and stuff like that.
Correct.
So I guess it kind of will work the same way. So if I had, $350,000 in equity in a home, then I can borrow that money, interest only, borrow the equity by getting a loan on it, interest only payments every month, and put that 350, or I'm just gonna say $100,000 in this ADU case because I don't need $350,000 to build an ADU, but let's just say $100,000. So $100,000 loan out of the 100,000 equity, build the ADU, and then short terms, probably within a year, I have to either pay back that 100,000 or sell the property. Hold on, because I wouldn't want to sell the property if I'm gonna build an ADU on it, unless it was for like a rental property ADU. Then, but then that would be a rental property, and I was sitting my primary residence. Oh, but you did say I could pull the money, the equity from an investment property as well to build an ADU. So therefore, both of those I don't live in, and that wouldn't matter. But I would
So
just need to pay back the 100,000.
yeah,
I'm
so
just kind of
you either have
talking
a
to.
first lien and then a second lien, because it doesn't make sense to carry an interest only payment long term, because it's not going
Correct.
to reduce the principal. And
Correct.
so, you eventually going to finance that into your current mortgage note as a first and second, or maybe refinance the whole thing. There, in that case, it might be better just to go with a refi versus
Mm,
that product.
I
It's
see.
just certain situations for certain things. And so for selling, this is a great for selling. For that
Mm-hmm.
situation, it might be cash out refi versus,
Mm-hmm.
or if you're going to just build it and then sell it to increase the value of that property, where then you
Mm,
go out and get another appraisal. And now, this ADU maybe increases the value by what, you put into it. But then that's kind of risky because you might put 150 and it only gives you 80.
mm-hmm. Yep. Especially on ADU, it doesn't give you like dollar for dollar value back.
And
Um,
all these are still new. So you got to understand, when they start coming out with barn dominiums, container homes,
mm-hmm.
ADUs, it takes them about 10 years to catch up to say, we're going to start approving these kind of loan products. So now that
Mm-hmm.
period has already, kind of coming around. That's why now they're approving and having these different loan programs, because some of these don't fit into Fannie Mae and Freddie Mac guidelines. Where now,
Mm-hmm.
private lenders and banks are saying now we got enough data and enough comps to, show that they don't lose value and they also appreciate over time like regular homes.
Mm-hmm. Nice. Nice. Okay. Cool. I'm trying to think if there was anything else that I had. You answered all of my questions or the questions that I usually have gotten from clients. Um, is there any part of the program that we didn't touch on or talk about that you want to highlight um, at this time?
I think we touched on a lot of things. I didn't see any questions come in from the chat, as we're live, here and everything. And so, people, like I said, they just got to get into the new way of doing business. And so, we always say, secure the deal first and sell later. And so, they
Mm-hmm.
don't just have to just wait, to sell and to buy. And, this is, like I said, it's a strategy. And, it's not for an agent, that is kind of like, tunnel vision, and not looking at, being open to, to the new way of doing business or the new model. And they're really not really servicing the clients, and taking advantage of the full potential of that client, because as a seller, they have a lot of equity and a lot of buying power that is not being unleashed,
Mm-hmm.
and it's really being limited by just keeping them in the frame of wait till you sell, then let's move on to the next transaction.
Mm-hmm. Yeah, and my biggest complaint with sellers or clients that are selling and buying at the same time is the move. The move is such a painful thing because it takes so much time and effort and energy to move from one house to another. Nobody, if they don't have to, wants to move stuff out of one house into a storage or some type of temporary place and then move it to the new house once that closes. They
Exactly.
would much rather do one move from the old house to the new house, um, as the transactions close, and that is the best and the ideal situation right there. And this program would definitely help out with that.
And you said it the best. That's a pain point. So if you
Mhm.
can eliminate, reduce that pain point,
Mhm.
no one wants to, get a shot in the arm and, go to the doctor and get a needle or shots. If you can say, I can take a pill and swallow it versus take a shot, that's what this is. This is a pill to real estate versus you taking a shot in the arm by, like you
Mhm.
said, going in to put it in storage, packing, storage, for storage, back to unpacking. That's a pain point in
Mhm.
a real estate transaction. Now, if
Mhm.
you're telling me I can take a pill to make it easier and smoother, the easier to digest and to move forward, man, this is a better antidote, and
Mhm.
solution, than anything. And so as the clients experience that, they're going to be, and then they can hire professional movers at the same time, where it doesn't
Love
interrupt their
professional movers.
schedule, their job,
Yep.
taking time off of work,
Yep.
cleaners. I mean, they got the money to do all that.
Yep. Yep. I'm a big advocate for movers, professional movers, hiring
Exactly.
professional movers. Yeah, a lot less work, a lot less stress, lot more ease on your part.
And
So
so, like you
yeah.
said, you're adding more value, or at least
Mhm.
enhancing your, you're bringing more value as an agent to the table to your
Yep.
clients versus them going somewhere else and going through all those pain points.
Yep. Yep. You're improving your service. It's another tool in your tool belt on how you can help and serve your clients better, giving them a more efficient and streamlined moving approach
Correct.
for moving
You know,
process.
Yeah, and I mean, you shared a lot of insights, and you touched on a very, very highlighted on a very good, excellent points. And that just adds more value, to you as an agent, and even us as a mortgage loan officer and a brokerage. We're here, to be innovative, and and take, the pioneer approach, and not just wait, until things are popular and then jump on the bandwagon.
Hmm.
You got to kind of be an innovator, in this marketing space. And because there's a lot more agents to compete with than it is for loan officers.
Hmm. Yeah, there is. Yeah, there is. Cool.
Yep. But yeah, I
I
think
think that's all I have.
I want to, thank you for your insight and your time for, jumping on the Mortgage Broker podcast here, or more real broker realtor connect, because that's what it is. It's a broker and a realtor relationships and improving it. And, how, we can, share ideas and knowledge on, what we can do to, better our business model, and, like you said, improve our customer service, and the client experience is everything. And, the less pain points, the better the client experience, the more referrals, and, it's
Hmm.
just, you know, make you be more sought out versus them going to a place or another agent or another loan officer that
Hmm.
their experience is just going to traumatize them. They're not going to
Hmm.
do it again.
True. 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 Yeah, they're not gonna want to do it again. Yeah, and that sucks. 'Cause then yeah, you lose that future business opportunity.
Correct.
So, yep, and if you can make it easy for a client today, then they're going to tell friends and family about it, and you're going to have much more referral business because of how easy you and your lender, Marshawn, has made that process.
Well, how can they get a hold of you, Darren? And and how big is your team? And and so what for anyone
Yeah.
out there listening, looking for a realtor and some and like what Darren has presented, how can they get a hold of you, Darren?
So the best way is my cell phone number, which is 559-312-7467. My second best is Instagram. Dad Realtor Investor, Dad underscore Realtor underscore Investor, spelled all in English, spelled all the way out. That's on Instagram. So you can DM me there or follow me first there and then DM me when the time is right for you. But through text message, I see those much faster. Emails, don't email me. I'm not good at that. And well, not that I'm not good at it, it's just too much noise in my emails for me to be sifting through every day or every hour or whatever. So text message, you reach me directly, or phone call will be helpful as well.
And also, like to let them know, I'm also proof of your work. You helped me buy my first home, you know, and so you got me in my home, and so I know the experience. I've been through the process with Darren and Strive Real Estate, and so I was blessed, fortunate. It was a beautiful home, and so we went out looking, didn't get the one we wanted at first, but you and your wife, man, you guys secured that deal, and I've never looked back from that. And you send me the
Hmm.
postcards, the invites, the wild
Hmm.
water adventures. I mean,
Hmm.
all the things you do for the family setting, and so you're not just a transaction, you become part of their family. And so I just
Hmm.
want to let people know, the experience has been great. And so, you've helped me. And so if I'm living proof of what, Darren has done, and him and his team and help families. And so, that's been
Hmm.
many years ago, but, you know, they are, genuine, agents that help people and get people into homes.
Yeah, right on. I appreciate that, and it's been an honor to help you and to see you at the client appreciation events over the years, um, and just continue to chat with you, connect with you, jive with you, and all that good stuff. Um, Last answer to finish off what you asked me earlier. So we help about on average about 100 families a year, 100 families buy and sell a year. Our team right now we have about I want to say 7 or 8 agents on our team, and then two support, actually three support. We have a listing coordinator that handles all the listing stuff for me, like everything from taking pictures to writing the professional description, to setting up the lockbox, to inputting in into the MLS, all of that type of stuff up until we go into escrow. Then we have a transaction coordinator that does all of the paperwork, and she's the back end for everything from escrow to close, or contract to close. And then on the back end of that, we have our team manager. She supports everybody however she needs to and make sure things are on point. She sends out certain emails throughout the milestones of the transaction. And yeah, we do our best to make it as easy and seamless as possible for our clients. And that way they become raving fans and will send us the greatest compliment, which is a referral of their friends and their family.
Yeah, that's awesome. And I know you guys
Hmm.
give back to the community. You guys do a lot of donations for, I believe, for children's community
Community
hospitals. So,
hospital, yep.
you're not just
United Health
profit
Centers as
driven.
well.
Yeah, you guys do a lot, a lot of
Yeah.
philanthropy,
Hmm.
and supporting causes and stuff. And
We do.
if anyone wants to get a hold of me, my number here is 559-412-7248. I'm also a licensed mortgage loan officer. I'm available 7 days a week. We also have a AI assistant 24/7. And so we do have a team as well. And so thanks again for sharing, Darren. And like I said, I'm living proof of what you do for people, and the proof is in the pudding.
Hmm. Right on. Well, thank you for having me on, and highlighting and sharing some more about this program that I believe will be very helpful for many people in this situation. And yeah, we look forward to helping you out there if you're a seller looking to buy, or if you're just looking to sell and not buy because you're moving out of California like so many people are. Um, or refinance or HELOC or the many other programs that Marshawn has. We'll be happy to talk to you and connect with you and see what kind of resources we can offer to you um, to help you achieve what you're looking to do.
Okay. Well, thanks again, Darren, and we'll connect again. And you have a productive week, and
Mhm.
we'll reconvene another time, another day.
Yep, right on. All right, thank you, Marshawn. Take care, man.
Thank you.
All right.